Welcome back. And in our top business story, bank assets rose nearly 38 billion dirhams in the first 2 months of the year, according to the latest data released by the central bank. The results show that the UAE banks still have the largest bank asset base in the Middle East. For around 1.6 trillion at the end of December 2011, total assets of the 51 banks swelled to nearly 1.7 trillion dirhams at the end of February. Deposits also jumped by nearly 40 billion dirhams for the combined 23 national and 28 foreign lenders in the UAE, while credit rose by 1 billion dirhams in the same period. The combined assets of Saudi Arabia's 12 commercial banks stood at around 1.6 trillion dirhams at the end of February, according to the Saudi Central Bank. Abu Dhabi duty-free recorded its best sales quarter ever, with total sales amounting to nearly 200 million dirhams, a 32% rise from the same period last year. The results came off the back of a boost of 22% in passenger numbers. Additionally, according to a local paper, Mohammed Al-Baluki, the chief commercial officer at Abu Dhabi Airports Company, stated that the completion of Terminal 1's refurbishment in Q4 of last year has resulted in an increase in the width and breadth of range for Terminal 1. In terms of products sold, Abu Dhabi Duty Free saw sales growth in every product category. Here in Dubai, Dubai Duty Free saw total sales rise by 14% to 1.42 billion dirhams for Q1. According to the World Travel and Tourism Council, the travel and tourism sector's contribution to the UAE's GDP is forecast to rise to 15% over the next 10 years and be worth 277.8 billion dirhams annually. Saudi Arabia is the most preferred destination in the Middle East for would-be migrants, with the UAE following behind a close second. According to the latest findings from global research firm Gallup, 13% of the world's adults, over 640 million people, would like to leave their country for good. 31 million adults, 5% of those who would move, chose Saudi Arabia as a destination, which ranked 5th on the overall list and number 1 for the Middle East. The UAE came in at the number 10 spot overall and second for the Middle East, with 13 million people preferring to locate to the Emirates, representing a 2% share of total potential migrants. The US came in at the number 1 spot with 150 million people and a 23% share, followed by the UK at 45 million and a 7% share. The company has been tracking patterns of potential migrants across the globe since 2007. The Union National Bank has reported a 3.3% increase in net profit to 474.8 million dirhams for the first quarter of 2012, up from 459.8 million dirhams in 2011. So let's now take a look at the stock indices across the GCC. And looking to other news, currency majors made some big strides against the US dollar in trading last week. And the British pound was the star amongst the currency majors, gaining 1.71% against the US dollar and a gain of 0.52% against the euro. Attention will now turn to the US's Federal Open Market Committee rate decision on Wednesday to get a bearing of the future prospects of the US dollar and its effect on the euro and British pound. Well, to tell us more, we earlier spoke with Gaurav Kashyap, the head of the DGCX trading desk at Alpari Middle East.
Well, Laura, it was a very, very big week for the British pound last week, and we can expect more of the same in trading this week. On Wednesday, we have the UK economy's overall GDP reading. The year-on-year reading is expected to come in slightly lower at 0.3% as opposed to a previous reading of 0.5%. Although we expect it to fall in that range of 0.3%, we can expect the pound to continue to get good buying support in the week ahead. Against the US dollar, probably we can expect the pound to make a higher test of around 163. With regards to the euro GBP cross, We're expecting good support to come in at 0.8165 levels, where we've seen some good institutional buying coming in. Overall, the main focus in the week will remain the US's FOMC rate decision. Now, the Federal Reserve is expected to keep rates unchanged between 0 and 0.25%, which is a historic low. But once again, Ben Bernanke's comments in his press conference following the announcement will be what traders will be really watching. Now, once again, the U.S. economy has been offset a little bit by weaker jobs growth, as seen in the last month's jobs report. And we're expecting Ben Bernanke to not change his rhetoric too much with regards to if we will be seeing quantitative easing measures. Remember, Laura, when we see quantitative easing measures in the US, it's going to naturally weaken the US dollar against other currency majors. But once again, we maintain that the Federal Reserve doesn't have any pressing or immediate need to introduce measures, and therefore we don't expect Ben Bernanke to go down the mention of having QE3 coming up. Also, we wrap up the week with Friday's US GDP reading, which is expected to come in at 2.5%.